Hey everyone, Joe Carbone here with your July 26th market update. July was a month of mixed results, and I want to make sure you have the right context as you look at your report this month. What happened? The major story driving markets in July was a return of volatility in the Middle East. The ceasefire between the U.S. and Iran that was established in June broke down during the month. Military exchanges resumed. Iranian forces stopped oil tankers from transiting the Strait of Hormuz, and Brent crude oil prices surged nearly 24% for the month as a result. That brought energy cost and inflation concerns back to the forefront for investors and weighed on stock prices throughout July. On the positive side, corporate earnings were outstanding. S&P 500 companies are reporting earnings growth of nearly 47% for the second quarter, the highest level since 2021. Banks, technology companies, energy companies, and consumer business all delivered strong results. So you had a tug of war all month between strong earnings on one side and rising oil prices and geopolitical uncertainty on the other. The result was a nearly flat month for stocks. What the markets did. The S&P 500 slipped just 0.13% for the month, essentially flat. The Dow edged up 0.32%. The Nasdaq declined 3.2% as technology stocks continued to face some pressure from concerns about AI spending returns. Year to date through July 31st, all three U.S. indexes are now clustered right around 9% gains for the year. The standout performer in July was international markets, which gained 1.64% for the month and are now up 11.67% year to date, ahead of all three U.S. indexes. Oil, gas, and bonds. Oil was the big story. Brent crude closed July nearly $90 a barrel, up nearly 24% for the month. That reverses much of June's drop and means energy costs are back on the radar for inflation. Gas prices followed crude higher during the month. On the Fed side, the July meeting ended with rates held steady at 3.5% to 3.75%, but three Fed officials dissented and voted to hike rates now. Markets are now pricing in a better than 60% chance of a rate hike at the September meeting. GDP growth came in at 1.5% for the second quarter, a bit below expectations, while inflation is still running at 3.7% annually. The Fed has a tough balancing act heading into the fall. Sector winners and losers. Energy and technology are now the two top performing sectors year to date, each up more than 30% for the year. Consumer staples and healthcare held up well in July as investors gravitated toward more defensive areas. Technology stocks pulled back during the month as investors continue to wrestle with questions about AI spending and when it will translate to profits. What is the silver lining? Here is what I want you to take away from July. Despite the noise around oil prices and the Fed, 10 of 11 S&P 500 sectors are growing earnings year over year. 8 of them in the double digits. Corporate America is performing well. Consumer spending is resilient. Your portfolio is up across every index we track for the year. And international markets at nearly 12% year to date are doing some heavy lifting on your behalf right now. That is a well-built, globally diversified portfolio doing its job. As always, if you have any questions about your account or just want to talk through what any of this means for your plan, do not hesitate to reach out. I am here for you. Talk soon and go eat some pizza. See ya.